This is Macro Analytics, delivering frank conversations on global macroeconomics and market analysis, outside the mainstream, featuring discussions and debates between Gordon T. Long, publisher and editor of GordonTLong.com, and his guests. The content of this discussion is strictly the opinion of the participants. It is in no way a solicitation for business, nor is it to be considered investment advice of any sort. Always consult a registered investment advisor before making any investment decision. These discussions are extremely hard-hitting and terribly frank, and parental discretion is advised. Now, on to the show.
Good morning. I'm Gord Long with GordonTLong.com, and I have with me this morning John Rubino, well-known author and publisher of the website dollarcollapse.com. Good morning, John, and welcome back to Macro Analytics.
Good morning, Gordon. Nice to be back.
John, the last time you were here, we discussed global imbalances in central planning, and it was a great discussion. Matter of fact, it went on. I had to break it apart into two parts as a show, but it was all part of a roadmap which we had laid out to our listeners. And I thought the highlight of our last discussion was the path from global imbalances has been marked with what you referred to as a higher degree of authoritarian control. And whether in the form of policy, legislation, regulatories, laws, fees, taxes, or whatever, but control is being placed on individuals, groups, small businesses like we've never seen before. And it really kind of brought home why this path is unfolding. And I have up here the roadmap from my 2012 thesis, Financial Repression, with which a much higher level of granularity than we've talked about or shown before. And it's not my intent, or I don't really want to spend a lot of time today, but what I was hoping to do, and what I see, it is what's really greasing the rate at which that previous slide is unfolding. Why things are moving so quickly towards this world of central planning and statism, whether it's shown with financial repression and crony capitalism. And a lot of it, to me, is best summarized just simply as monetary malpractice. And a lot of the things that we're doing, and it's not unique to the central bank or the Federal Reserve as a central bank, but all of the central banks in the G8 are practicing the same sort of thing, and it is really accelerating that. Do you sense that, or I'm a little off track in my comment there?
Oh, no, I completely agree with what you're saying, and I think the root cause and the reason that things are accelerating all comes back to the world going off the gold standard back in the 1970s. Basically, governments rebelled against the limitations that sound money and the basic simplicity and clarity that imposed on them. And they broke the link with gold, and have since that time not had to choose, not had to prioritize. They're able to print the money to do basically anything that their constituents want them to do. So now we've got a massively growing military-industrial complex in the U.S., a massively increasing welfare state at the same time, and then money and debt being created in ever-increasing amounts in order to pay for everything. And that necessarily brings with it all kinds of distortions and malinvestment, which necessarily brings all kinds of new government interventions in order to keep the malinvestment from blowing up. And so you get exactly what you would expect to get in that kind of a circumstance. So, a partnership between business and government in which they're no longer separate organizations. They're all departments in one organization whose main goal is to increase its own power. We created a giant global bureaucracy that's made up of the banks and the military contractors and the governments. So in that sense, Ben Bernanke is a department head now, rather than the head of a separate organization. He's part of the global banking empire, if you want to call it that. And his job is to increase the money supply in the U.S., in the United States division of the global empire. And so when we look around and it feels authoritarian, or it feels like we're heading for some kind of totalitarian state, that's why, because we really are heading in that direction. Once an organization becomes reaches a certain size and power, it stops fulfilling its original purpose, whatever that was, and becomes all about its own self-perpetuation and growth. And we're at that stage of the process now with global government.
John, the chart that I have up, this schematic that I have up right now, I started originally with a series I did with Ty Andros on the fallacies of GDP and the distortions that we had in GDP, and it came out of the inflation rate, which begged the question of how inflated the CPI was. And in going through, and I think a lot of our listeners are aware, there's so many of our government numbers that come out today. They're just absolutely bogus. They're distorted. And it's not unique to the United States government. All of the governments, when you do any kind of reading, you'll find everybody in those countries are accusing their governments of distorting. So we've got a lot of this that's now very broad range. And what happens is it starts us on this slippery slope that accelerates, which is misinformation, which creates moral hazard. And then people start to react to that. So people start to game the system. You get manipulation that's coming in. Legal, but borderline manipulation, starting to question whether it's moral or not. And we've got all sorts of examples of that in today's press, whether we're going to talk about J.P. Morgan, we're going to talk about LIBOR, or any number of things that are going on. What happens with this manipulation, you get distortions and greater levels of distortions. And these distortions lead to malpractice. Malpractice, not just in business, but in government and government policies, which in itself feeds unintended consequences. And I think all of this to this stage is pretty evident to a lot of our listeners, but I don't think what is really evident to as many as it should be is that's a precursor to mispricing and to malinvestment based on mispricing. And as I was talking with you just before the show, I challenge anybody to name anything today that's correctly priced. And if you really think about it, you will start to see consistently that it's reached the level now where there is incorrect pricing that's leading to the malinvestment. And comments on that level of mispricing that you're seeing, or do you concur?
Oh, I completely concur. Easy money, which we have, in historic quantities right now, with zero interest rates across the board in the relatively solid countries out there, inevitably leads to a mispricing of assets, especially as you said, when it's combined with governments lying about inflation and GDP and other important indicators. So the people out there who are investing and borrowing money in order to build factories or whatever, need some kind of a framework in which to judge whether it's a good deal or not, what they're doing. But instead they've got, inflation numbers that are wrong, GDP growth numbers that are wrong, and interest rates that are artificially low. So it's inducing them to put money where it doesn't belong. And this is basic Austrian economics. When you start fiddling with the monetary system, you end up with malinvestment because you fool entrepreneurs into thinking the world is one way when it's really a different way. So they act in ways that are inappropriate for the way the world really is. And so you end up with all kinds of investments in things that aren't going to pay off in the long run. And those investments have to be wiped out in some way for the economy to start over again and to begin to grow in a healthy way. And we have seen in the last 30 years, the mother of all malinvestment processes. Now, we've got so much paper out there that can never hope to be covered by the cash flows from whatever project the paper was created to finance, that the only solution is some kind of a massive liquidation of the debt that's out there. And, again, this is nothing mysterious. This is basic Austrian economics, except it's on a bigger scale than it's ever happened before. And, to get back to the idea that this also leads to a moral decay, because this is really crucial. Inflation destroys the morality of the society where the currency is being inflated. And that's something that's not really well understood by the economics profession, apparently, because they seem to be, everybody except the Austrians seem to be so comfortable with ongoing inflation. But in fact, by lowering interest rates to the point where saving is no longer profitable, you encourage people to borrow, which we generally think of as a relatively bad thing, and we discourage people from saving, which is a good thing in the long run. And so you end up turning societal morality on its head by encouraging bad behavior and discouraging good behavior. And that plays out in all kinds of different ways. For instance, one example is that in an easy money environment, bad bankers end up driving good ones out of the business. For instance, if you're a banker and interest rates are low and there's tons of money coming into your bank that you can lend out, but you've lent out money to everybody who's a good credit, you have two choices. Basically, it's to be a good banker and stop lending money to bad credits, to people who probably can't pay back the loans. In which case, the guys running the other banks will lend money to those customers, book a bunch of fees in the short run, book huge profits that year, get huge bonuses, and look like smarter bankers than you. And you get fired. That's your one choice. The other choice is to join them and become, Angelo Mazzullo or somebody, who's running a company that just lends money to anybody. And you book the fees, you sell the loans to packagers who then turn those loans into bonds and sell them to unsuspecting pension funds. And you make out in the short run, so you inevitably either leave the business or you choose to become somebody who's, participating in the destruction of the system in order to make money in the short run. And that's what happens. That's how easy money distorts a banking system and turns it into something like we've got today, where the predators are running the show. And that's just one example of the way that easy money destroys the morality of a society. But it's a big one because it's highly public now. We all know that Goldman Sachs has become basically a predatory organization, but it's not clear to people how it happened. Well, that's how it happens. The government is pumping out huge amounts of new money, giving it to banks, who then use it for short-term gain rather than to build long-term value.
John, even though this chart says monetary malpractice, I agree with you fully on your comments about the morality. As a matter of fact, I put out a paper to my subscribers. It was quite a long one, and it was called moral metastasis, and comparing this to how cancer grows and how it splits and multiplies. And on this particular chart, between manipulation and malpractice, in there we go from issues that are, whether they're moral, to becoming issues that are legal, and that line starts to blur because of some number of the points that you were mentioning. But the steps that I laid out in that particular paper that mirrors this one was that, the first stage is you get manipulation and misinformation. And right now, the symptoms of that right now are what we're seeing with Librogate and, and Barclays and what they were doing. I'm not suggesting, to me it was criminal, but certainly it was manipulation at a very high level and misinformation, and so you get this, I call it Glass-Steagalism or rate rigging. But the next one is it leads to malpractice, because you get so not confused, the games get overlaid on top of each one, on top of each other. And the best example of that is, J.P. Morgan and the giant whale situation right now. I mean, I go through the paper, John, and I circle issues in red that line up with this moral decay that I'm describing here. And every day it's just red. I mean, if you were to, it's shocking when you start to focus on it, because after this malpractice, you then get into malfeasance. Now we're crossing a legal line because these games are getting so sophisticated they have locked themselves in where they almost are forced to break the law. An example of that, MFS Globe, and what happened with Corzine and the games that he was playing with, whether he had inside information and got himself caught and taking segregated counts. Enron, WorldCom, Tyco, remember how they involved, and when you listen to all of them at the time, they felt they were on the right side of the law with SPEs and SPVs, but it had crossed. Then you get further where they know they're across, like Bernie Madoff and Alan Stanford in this group, and then just last week PFS Best Brokerage, where he knew he was across the line. The pressures on him, low interest rates, etc., have now forcing more and more people to it, and out of that comes this level of mispricing and malinvestment. So there's two streams, if you would, to net this out. You've got monetary malpractice and you got a moral decay, and they, as you articulated very well, they feed off each other. And that's what's driving us at an accelerated rate along that chart that we showed here of our roadmap.
Yeah. Another example of that I think is really interesting and that's been evolving over time is the relationship between the regulators and the industries that they're supposed to regulate. Once upon a time, those were very separate organizations, or at least in theory. And the regulators were supposed to be experts on a given industry and to watch over that industry and make sure the industry stayed within generally accepted bounds of business behavior. But as the system has gotten more and more complex, they've become business partners more and more, where for instance, banking industry, what they're doing with derivatives is so complicated that the regulators have trouble understanding what they're doing. And it takes years for a banking regulator to really get into the nitty-gritty and really be able to tell when a bank is conning clients as opposed to, being an honest banker. And so what happens is the bankers allow the regulators to get up to speed and then hire them away for 10 times their original salary. And so the regulations or the regulatory agencies have to bring in somebody new who has to get up to speed again. Meanwhile, the banking industry has the old regulator there who knows all the tricks and who's able to keep the new regulator in the dark until the new regulator gets smart enough to be hired away. And so you end up with the regulatory agencies and the companies they're supposed to regulate being partners in what becomes more and more an unethical, at least in some cases illegal operation, because they can get away with it. There are huge amounts of short-term profits to be made by pushing the envelope, one step beyond legality. And regulations in an incredibly complex society like this one don't create barriers to illegal behavior like they used to, because the regulators just flat out can't follow what's going on.
That was so clear during the Bernie Madoff congressional hearings when the whistleblower, who had been, pounding the table for 3 or 4 years before saying Madoff is committing crimes here and actually could show it. But the regulators are completely understaffed. That's no excuse, but did not understand, even close to understanding what was going on. And when they do get there, whether they're hired away or not, and I fully agree with that point, in fact, it's changed again. It's mutated and moved on. And the organizations are so large and things are getting so complex that it's almost impossible even for a well-staffed and well-seasoned regulators to really control it unless it's at a very, very high level. And I'm starting to come out of the camp, John, that really things are getting too big, not too big to fail, but too big to exist because of levels of complexity, not just for regulatories, but the risk that they impose on our societies. And one of the things we learned from nature is how organisms grow. They split and divide, but they always go from large and they get smaller. But in splitting, it's the fact that they can network that allows things to work. Organisms, the brain is a good example of that, of the networking that goes on. And so what happens is we need to be breaking apart these organizations so they have less risk and we can have better regulations and allow them to take the level of sophistication and complexity to another level, but somehow not destroy the system, or like an organism doesn't destroy the host body in the system.
Yeah, and that's not going to happen. That the kind of radical simplicity that you're talking about, because the people in charge are the ones who would have to do it, and they're the ones who benefit from it. So
never going. Yeah. I fully agree. Never going to happen. The only way it happens is you have a massive crisis. Things are shattered for whatever, and you start picking up the pieces, and you pick up the pieces that actually work.
That's exactly right. The market is going to impose simplicity on us again.
Nature always does. It's like trees don't grow to the sky.
Yeah.
So you've got various things that will work, but then they fail because it just defies nature. And I fully expect, John, because of this level of mispricing and malinvestment, which is so far off the scale now, that we are nearing a market clearing event, and it will be very, very broad based, because the complexity now is when something breaks now, keeps breaking, and nobody really has their hands around how to stop it. We were so fortunate in 2008 that we are actually able to contain it. And I think we were a hairbreadth from losing it. And even then, to contain it, we possibly put ourselves onto an absolutely accelerated road to the next crisis. And I'm looking for the, crisis 2 to be bigger and even tougher.
Yeah,
I don't mean to be this doom and gloom, but we have not fixed any of our problems because of this monetary malpractice.
No. Well, historians, when they get a chance to look at this with a little bit of perspective, will probably date the collapse at 2000.
Yes, I thought you were going to say 2008, and I was going to argue with you.
Yeah.
No, it happened in I believe December of 1999, just prior to the breakdown of the tech bubble in the spring. And I've got so many charts, John, that really, really show that action.
Because that's when we really started panicking. We just opened the floodgates. And since that time, we've taken on so much more debt that we've delayed the inevitable. I wrote a series of articles on dollar collapse called The Long Wave versus the Printing Press. And, from almost any long wave perspective, the global economy peaked in 1999 or 2000 and should have entered a Kondratiev winter right then. But because we all have printing presses now, we've been able to pump out so much more currency and cause the creation of so much more debt that we've been able to delay the inevitable, but at a cost of $20 trillion more debt than we had in 1999. Which means the collapse when it comes will be that much bigger. And we're clearly getting ready to try again. The next round of quantitative easing will probably be global in scope. It'll be coordinated with the ECB and the Japanese Central Bank and the US Fed, all liquefying the system at once. So we're liable to end up with another $10 trillion of global debt on top of what we've got now.
I think that's minimum, John.
Yeah, and which will delay the inevitable for a little while longer. But when it comes, Gordon, my God, when you've got a narrowly defined debt per family of 4 of $1 million already in the U.S., and let's jack that up to $1.5 million. And what's going to happen then? The systemic collapse will have to be so horrendous to clear out all the malinvestment to get us back to a reasonable starting point again, that it's almost unimaginable. We've never seen anything like this in human history.
This is the fiat failure I'm talking about here for 3 to 4 years. And when I originally laid it out, probably it was after you'd even written your book on dollar collapse. But I had originally felt, and I'm going back now to 2006, that it all led to 2012, and this was the year that it was going to happen. I now believe that I was wrong on that. It's going to be 2013, and maybe even as late as 2014. The reason I say that is because of the degree to which the money printing will come, and we haven't seen anything yet. But it will collapse, John, and I have a chart up here which just takes the original simple chart and starts to explode the areas that were in it that we have now started to distort, to change and cause problems. And so all of these now are faulty foundations. And so when things start to break, they'll all break because they're all faulty. And putting it back together, it's like Humpty Dumpty. You can't assemble it, and you can't do it in a timely fashion. And when you have disruptions, we saw that in 2008 with the supply chain just because of trade credit. Look what happened there. And how quickly it accelerated. So we will see a reestablishment, I think, after that, of moving away from a fiat currency system to the establishment of a solid-based, real value currency. I'm not suggesting it's gold or silver, but something that, in fact, will put constraints around a democratic system. But it's going to be a very painful process. John, we're out of time. We have to wrap. Any last comments you want to make on what we've been talking about?
Yeah, just a quick one, Gordon. I think what you mentioned just now about fiat currency is really interesting, because that's going to be one of the fascinating realizations at the bottom here, that the whole concept of fiat currency doesn't work. It's not just the dollar or the euro that's being mismanaged. It's the concept of the government / banking industry having a printing press that at their discretion allows them to create as much new money as they want to. That's a fundamentally flawed idea. And so the discussion at the bottom when we figure this out is going to be really interesting, because we'll have to come up with something else. that takes that power away from those guys. And so the battles will be very intense. And I think we'll finally educate ourselves about what money is and what role it plays in a modern economy. And I'm looking forward to that, because nothing's going to get fixed now until everything falls apart. But at the point that it does fall apart, we'll have a chance to put something more interesting and more functional in its place. And I'd like to be around for that. So I want it to happen soon. Yeah.
John, one of the things about nature is to grow, we always have to split. And not just split into two, but we get rid of shells that we're protecting ourselves or whatever. But to grow, we have to go through difficult times. It's like one step back, two steps forward. And so in spite of what we're seeing on the other side of this very, very difficult period of time, which is probably going to be, in my mind, 10 to a 15-year period, on the other side of that, I think the world will move on to higher levels of productivity, integration, social standards, proper balances around the world with living standards. I see just a wonderful world out 35 to 50 years because of what we're capable of doing. But between now and then, it's going to be ugly. We have to break, John, until we're going to have back another session here this week, and we're going to talk about some of your great writings that are coming out. So, John, can you tell us, our listeners, where they could learn more about your site and your writings and the things you're working on?
Sure. I run dollarcollapse.com, and it's a news aggregation site / blog where we cover a lot of the stuff that you and I have talked about today, Gordon, on an ongoing basis.
Talk to you in a couple days.
Great. Thanks.
This has been Gordon T. Long, editor and publisher of GordonTLong.com. New recordings are posted regularly and can be found at GordonTLong.com. New show notifications are available through RSS feed, iTunes, and other social networking venues at GordonTLong.com.